Hey guys, Sean from Invest to Live here. Today I want to talk about a topic that's really interesting for me and I think for a lot of people out there today as well. And I want to talk about the EV market from an investment and trading perspective. And I think my big question is the EV market just one huge bubble waiting to pop built completely on hype? And that's what we're going to dig into today, in my opinion, on this. A few reasons why, and a few reasons why not, and how I would play it either way, depending on how you feel. Should still make sure you know what to do. Before we jump in, as usual, I'm not your financial advisor. This is purely for education and entertainment only. And please, if you find value from this video or any of my others, please subscribe to the channel and give us a thumbs up. We really appreciate it as we're starting to grow. So let's jump right in. So I feel like it's unavoidable nowadays to hear about the EV market in general. It's on the news channels, it's in popular culture, it's in magazines, it's on YouTube, it's everywhere I go, I'm hearing about it. But from an investment perspective, is it really the right place to be putting your money? Is there a lot of risk there for you? And if you're trading it, how can you be sure that you're not buying into something that's hype and going to blow up? A great example of this was Nikola, which raised a ton of money, skyrocketed, and then has since really fallen from grace. Although caveat, it's slowly coming up again, which is sort of goes right to my point of, is this just purely hype or is there a real reason for it? So I want to talk from a fundamental perspective, a few reasons why the investment perspective of the EV market could be concerning. And a big part of this is this idea of where is the money coming from to fund all of these ventures and to see these stock prices rise once they go public. So let's just assume for a second that the entire market, the stock market in general, has $100 in it. And that $100 is split up between all the different components of it, the companies, the ETFs. It's got to go somewhere. So when a brand new hot stock comes and people want to plow money into it, it's not like suddenly there's now an extra $100 in the market. There might be some incremental gains from all kinds of outside sources, but we're not seeing huge increases in the markets in general. So what I like to think about is, if I'm going to invest my money into the next big EV or SPAC that's about to hit, that's merging with an EV, where do I have to take my money from my portfolio from to move it into that? So the question is, are average investors going to be willing to do that? Are financial advisors going to do it? Are we going to see large players moving money from sort of their standard place from where it is today, built within their portfolio, moving into more of a risk like an EV player? So that's just sort of one of the first things I think about, is like, where is the money going to come to keep these prices rising and keep them up for so long if nothing else is going to drop in tune to do that? So again, just one quick thought there. The other piece of this really is we're still somewhat unproven at scale here. Now, I'm not talking about Tesla, which has a big market and is obviously operating at scale for about a decade now. Really been seeing the 3 Series, right? So at scale, my problem is a lot of these companies that are now getting billions of dollars of valuation and seeing huge increases in price from a market perspective, right? From a trading perspective. For the most part, a lot of them are really still just in the hype stage. They might have a few models, they're testing, their technology is maybe cutting edge, but not quite out at scale or quite out to the masses yet. And then even the companies that are, think like a Lion that makes buses and trucks. They've been around for a long time, but relatively unknown and not that big, and still not necessarily scaling huge. Now, with that said, of course, we know that companies like Amazon are coming in and looking to buy a lot of these vehicles. So there's some hype that's building with that as well. But again, just something to be aware of, that, we still haven't really seen a huge scale of EVs on the roads. So keep that in mind as well. A big part of this also goes into this idea of how are we charging these vehicles and how do we charge them when we're on the road? I'm in the New England area and I'm not seeing chargers all over the place. That's not to say that at a local restaurant or chain, there might not be 1 or 2 charging stations, but at scale, I'm not really seeing chargers around, right? There's a gas station practically on every main corner, but I'm not seeing chargers all over the place. And that's concerning because we know that the ultimate range of these vehicles is still relatively limited. It might get 200, 300, 400 miles, and that is a lot, don't get me wrong. But it's still 200, 300, 400 miles, and you have to charge. You're going to be in some trouble and getting stuck there. Another big thing is, for the most part, these vehicles are pretty darn expensive. If you want to go out and buy a Tesla, it's hard to find used versions of them. And when you do, there could be work needed and there could be repairs necessary. So this is not necessarily just to this marketplace, but this is just a consideration that I like to think about, is how many local garages are really qualified to work on an electric vehicle or have even seen one in their shop. And then from that same perspective, we're not seeing used car lots full of EVs that you can buy for a cut rate because they're used. So just another thing that when it actually comes to getting out to the masses, there may be issues around adoption because of price, and that might mean that there has to be pushing a lot of push down on price, and that competition is going to start to remove margins that might be there today. Another big one, and I'll sort of leave this as my last point on why this could be more of a bubble that's built on hype than anything else, is it wouldn't take much for the major players in the market, the Fords, the GMs, the Mercedes, BMW, Honda, Toyota, it wouldn't take much for them to start plowing money in and developing their own products or buying these companies and pushing in with what they already have. We know Ford, for example, is invested in Rivian. So, they're already doing it, and we just don't know how that's going to affect the market long term. If they beat some of these smaller competitors to the market, that could be hugely detrimental to their ability to raise capital and to also get those premium stock prices. Now, those are some of the reasons why I think this could be a bubble, or it could be all built on hype. Now, that said, personally, and again, I'm not a financial advisor, I happen to think the EV market is here to stay. But I do think that it's going to be a question of how do we select the right companies with the right products, the right financial backing, and the ability to really come to scale and to work that technology and start to build into the future. So a couple of reasons why I happen to like this is, look, the EV is clearly, in my opinion, going to be the future. We know that fossil fuels are going to slowly dissipate till there are no more. This is a great option that's going to reduce the need for vehicles run on fossil fuels. I also think that once we reach scale and we hit capacity of what these batteries can handle from that charging perspective, from that mileage perspective, I think you will see pricing come down. And I think with that pricing, you also see margins come down, but that's okay because that's natural as an industry grows. This means cars should become more affordable. There should be more types of them from the standpoint of compact and affordable to big and luxurious to trucks and vans, everything in between. So I also think that one way or another, electric vehicles are just the future because I think that that's just where we are in the world. We're really transitioning towards that mindset. Not everyone's there yet, but it's just sort of that thing you see when you look on social arbitration. When you look at social arbitration as an example, we're seeing a lot of sentiment pushing towards excitement around the EV market. And I say hype, but I think there's also a little bit more than just hype. I think people really want this to be successful. And more than ever, people are willing to take a chance on going out and trying one or buying one or investing in these markets. Now, this brings up my next point. SPACs. SPACs are special purpose acquisition companies, and they are buying up EV companies and merging with them like crazy to take them public. Now, earlier I had mentioned SPACs could be a problem because this means money has to come from different areas, and this could mean that there's issues long-term holding value. The flip side to that argument, however, is a SPAC allows relatively unknown companies who are struggling to build technology access to huge amounts of cash. By merging with a SPAC, companies like Elucid or like Neo, they can go out now and be able to have huge amounts of capital, continue building their businesses and their brands, their warehouses and factories, their modeling of the cars, their marketing. They can get to market a lot faster. By doing it via the SPAC route, there's also some degree of velocity created to getting them out into the public view. And with that comes a lot of media knowledge and a lot of marketing knowledge around, why are SPACs doing this? Why are major institutional investors putting their money into a SPAC and then into an EV company? And I think that from an investment and trading perspective, there's a lot of opportunities to get into these SPACs and probably a lot of opportunity to see huge gains in the future. Now, another big piece of this that really helps the scale argument is government regulations are clearly going to start moving towards what I would call a greener future, or a future more based on EV type vehicles and companies, right? We're not talking necessarily having to be extreme here. We're just saying more regulations that are going to benefit folks who go more carbon neutral, who focus more on the EV market. I think these companies are likely to see a lot of government support from both tax perspective as well as just production and job support. So I think especially with Biden coming into office right now in the United States and his view generally on green and green companies is very positive. I think this is another reason why some of this hype and some of this sort of bubblicious looking market caps that we're seeing maybe are taking into account the fact that there really could be a huge boom in this market. A fourth on my reasons why I actually think we're not in a bubble is really the innovation piece. These cars are not just innovating at a slow pace. We're seeing battery density increase on a regular basis. What this means is that 200 or 300 mile cap could become 4 and 5 over the next 5-10 years. And I think that as we're finding ways to create cheaper ways to build and cheaper ways to go to market, we're also going to see more of this transition to charging stations throughout the country, where you might have a gas station that could be a charging station. Some of these companies are getting really creative and doing things like battery swaps in under 20 minutes, then you're back on the road again. This is pretty exciting because these are conversations we weren't having 10 years ago in the EV market that we are definitely having and seeing today put into production. And then even beyond that, that's just talking about the batteries and the charging. The way these cars are being built, I think they're going to keep getting lighter. They're going to keep getting more efficient, but they're also getting nicer. A lot of these cars are really, really luxurious. And, you know, it's funny, I wasn't even going to include this on my list here, but I just saw a commercial for a brand I had never heard of before that was just purchased by a SPAC. And I got to tell you, the car looked pretty darn good. And then really my fifth big piece of why I think this is a good place to be and why I'm personally going to start investing as the EV market at scale is I also think from a generational perspective, there's a lot of demand for this EV type of company, this, you know, earth first, green, doing more than just filling with gas that we're pulling out of the earth. So when I say a generational hype, I mean that in a positive way. I think our younger kids, college, high school, even frankly, probably younger than that, are excited by the idea of what these cars can do. Now I'm seeing a lot of people, their dream car is a Tesla, not a Lamborghini or Ferrari. And that's pretty exciting as well to think about because, you know, not only are they looking up to these kind of cars, but their leaders, like guys like Elon Musk, are wildly popular, and for a number of reasons, of course. But this is not traditionally how we've seen car companies, right? Younger generations couldn't care less about who's leading Ford, but Elon's doing these cool things. He's engaging with his audience. He's bringing cool cars to market. And I think these other folks out there are really bringing in top players into their companies to help develop and build the next generation of EV cars. Now, all that being said, whether you agree that we are in a bubble and it's all hype, or you think that we're in a great market that's going to keep growing and has huge potential, here's what my take is from the trading and investing perspective here. There are just absolutely a boatload of options to put your money into from both those who've already gone public via SPAC or just public in general, as well as those that are coming down the pipelines. We're hearing rumors about mergers. Like any new and growing market, some players are going to go huge. Tesla, of course, is a great example, but there's also going to be many that go bust. So I say this practically on every video I do, and I'm going to say this again. Whether you've been trading or investing for a long time, or you're just getting started because of the excitement in the EV market, make sure you leverage and understand protection capabilities for your downside. Make sure that when you're getting into a trade, you understand that this company could go bust. You don't know what might happen or what news could come out. You don't know if the EV market could crumble in a day or quadruple in a month. So especially though, with all these SPACs in the market, money seems very fluid between where it's going from one big hype article to another. Just make sure that you have stops in place or are leveraging things like puts against your position so that if you do have downside, you can either take profit on it in the form of a put or you have stops in place to limit that downside completely. And also please remember too, not all stops are created equal. A stop loss is not the same as a stop limit, right? It's a difference of execution versus price. So these are the kind of things you need to make sure fundamentally you have an understanding of in your trading and investing, and then put it in place as you're getting into the EV companies. So that's it. To reiterate, I think that there's a bunch of good reasons why we could be in some trouble in the EV market. I also personally think we're probably in good shape here, and the market hasn't quite gotten its grasp on what the future looks like here. But either way, make sure you protect yourself from an investment and trading perspective. And as always, I love making these videos. So if you have comments, please put them below. I'd love to hear what you think about it. Thanks so much.